presented by Limar Technologies and Karm Consultants. The topic of this webinar is Applied Fintech with CBDCs. So I welcome you all. Being doing some payments, or most of you are now doing an online payment through your debit card, okay, or you are using some sort of mobile phone like an Apple Pay doing the payments, or any sort of thing in which, or any sort of financial method in which you're using technology. We call it a fintech. And we have noticed that as we have evolved and as we have passed 1950, so we have noticed an invent of Nasdaq exchange, all sort of credit card mechanism. So we have evolved from that state in which we are mainly focusing on building a complete infrastructure to carry our payments. Experienced a global financial crisis in 2008. So we called FinTech 3.0 an era of startups, and also experienced the invent of Bitcoin, and different companies like Alibaba, or let's say Stripe, or different companies which are been evolving just to have good financial inclusion services. We call that era as an era of FinTech 3.5. Service, then we can pinpoint about, and we can see that what areas are to improve. So we have retail and commercial banking, we have depository lending, all the things for the consumer, for the retailers. We have domestic payments, we have international payments. Then we have seen cabbage, or different if you are living in Saudi Arabia or in UAE, let's say, you have seen that now government is trying to bring financial inclusions to actually have a trigger on their GDP. So
we've seen a lot of sandbox models that are being tried. So we've seen sandbox models, let's say, which are a mix of crowdfunding and tokenization, which are using private financing platforms, which is, then let's say embedded with something like an API. So again, they have ADGM in Abu Dhabi has a guidance for use of robo-advisory services in wealth management and asset management.
So if you're a foreign investor or a foreign company who wants to build a fintech or a regtech solution in Saudi Arabia, there are very clear guidelines by Fintech Saudi. Why people are going towards the Bitcoin or towards other good fintech app other than the banking system is that they have ease of getting to those systems. You have to just download an application in which you have to have your funds, and then once you are doing a transaction, your transaction will be broadcasted to the whole network. That transaction will be validated through blockchain technology. We just have to rely on two banks. Okay, let's say that if we are using Ripple, in this case, like UAE and Saudi Arabia started a Ripple project between the collaboration of two banks. So with this, what we are having, if we are having a blockchain layer in the middle, bank A can make the payment instantly to the bank D. So they don't have to rely on the SWIFT network. Using a technology, let's say a blockchain platform. So initially, what the buyer has to do, or what the supplier has to do, supplier has to send invoice to buyer. Then the buyer will submits approved invoice electronically to SCS platform. And this SCS platform, which is a blockchain platform, is controlled by smart contracts. So we are saying that, okay, we have to make that process automated. We can use smart contracts, but what goes into that smart contracts? Smart contract is essentially having different sort of modules, with what sort of things once need to agree with something, what is the terms and condition for agreement, how needs to claim it, what is the mechanism to accept it.
The different facets of a digital of a central bank digital currency. Fundamentally, the fact that it needs to be widely accessible, it needs to be obviously digital, it needs to be central bank issued, and it could be token based also. So an example here, for instance, Sweden has recently issued the e-krona in February of 2020, and that e-krona is deriving its value from their existing currency, but it may also have a significant independent existence on itself, which means that, let's say, if one was to go and deposit a certain amount of e-krona to a certain commercial bank, that will be treated as a deposit in the accounts of the said commercial bank, and the said commercial bank will have to then either, depending upon the balance sheet, either process such payments back to the central banks, or factor in the same within their ecosystem.
About non-bank private sector, what are those? These are the normal consumers, or people like me and you, okay, which are not a financial institution. All right. So if you see over here, assets, what are the assets? I mean, the thing which we owe, like we owe the money which comes as deposits. Okay, we have the bonds We have the bank notes, which is the fiat currency. We have the bank equity. I'll come in a while with bank equity, and what we have loans, which the things which we owe to other people, okay, in which we have taking lease, bank loans, just to facilitate our services. So that's what the balance sheet says with respect to asset and liabilities of a normal consumer.
Be based on DLT. They could be based on blockchain and tokenization model. They could be based on the entire blockchain structure in itself, but it's not necessary. I saw a very nice question on the chat right now. And the answer to that is that it is not necessary for it to be based on blockchain at all. Digital like CBDCs, let's say, the claim of the consumer or the claim with respect to a certain CBDC is with, let's say, the intermediary bank, cap to the amount of circulation that is being done with the CBDC in itself. CBDC, which could be a token based, it could just be a representation of, let's say, the money on the which will be in simpler terms, such CBDCs will be let's say, where retail consumers are using it for, if you're using it for some kind of purchases and all those things, that's something which will be more in the tokenized form. It is not the same as the blockchain token, but it could be. It depends on what technology you're using, which is based on the purpose in itself. Is a CBDC could just be a retail CBDC, which is, let's say, like I said, is just a digital extension of cash, or it could be a wholesale CBDC, where it could be also used by the institutions for settlements of assets, settlements of interbank transactions, or such various other aspects. But China has tried, to issue CBDCs. We already spoke of e-krona as well in Sweden. Turkey is trying. Saudi Arabia is trying to jointly issue a digital currency with UAE. Uruguay is trying. I know Tunisia was trying to launch an e-dinar. So there are multiple sectors where this has been tried. And here, which says that if all the governments introduce retail CBDC, they will probably have lowest transaction rates, and maybe payment gateways might just go defunct. So it's a contingency. We don't know what is going to happen, but the way I see it is that with the more and more open banking initiatives coming into play, uh, more and more fintechs will take the form of either account initiation services or payment initiation services. They may or may not act as, let's say, payment gateways per se for the transactions in itself, but they may start acting more and more like payment initiation services, perhaps, than to become the gateways in itself.
Is that they will confine this retail CBDC to certain transactions only, in a way that the banks and the fintechs can still play or can still be in the play field.
I saw a question from Raneem which says that in what cases are indirect CBDC is going to be a good fit. That's kind of my understanding, especially in cases of interest or any kind of financial products that are being offered by a certain let's say a commercial bank. That is the place where the claims are going to be kind of distributed in a fashion that most of the claims with regards to the CBDC in itself are going to rest with the the intermediary or commercial bank, and very limited of it is going to trickle up to the central bank. Because
Raneem, that a blockchain payment system like Ripple will kill the role of SWIFT in the cross-border payments completely. But what if SWIFT itself will adopt the blockchain technology for seamless transaction, like they did a POC with R3 Corda to get the benefits of blockchain? Yes, I agree with this. Like to replace, you need to understand this thing. Like you need to replace a technology or an existing system, you need to be better of it. You need to be better from it, or else you will not get the buy-in. So do you think that blockchain as of now can replace the SWIFT? I mean, the answer is no. Why? Because it's not only the cross-border payments from one country to another. You have to have a complete global system in your disposal to be able to effectively scale onto that and to able to effectively adapt that system. So for now, SWIFT, there will be some use cases of blockchain that they will be testing it. Okay, and then once they feel like they can scale it and they can leverage upon that, then they will be scaling it further. So